Welcome everyone to the Kindle Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Don't forget to subscribe, like, and share these videos. Quick announcement. Remember, we have a live cast at 1:30 Eastern Time on Wednesday. Make sure you bring all your questions, and I'll be going into depth on a number of markets. Yesterday's action was interesting. We were able to trade up to that higher end of the range that we've been at, around 31.50. We printed 31.54 yesterday. Market backed off into the close as there's a lot of nervousness as we come into the GDP on Thursday. Basic market sentiment and the economy continue to be stable as the markets buy into all the rhetoric that it's fed on a constant basis. One of the more interesting things that I heard today, and it has not been decided, but the Treasury is talking about delaying the tax payments until September 15th. We continue to get dose after dose of the modern monetary theory, MMT, with no recognition of any moral hazard. As I was doing my research tonight, I realized that this is part of the scam that's being put out into the economy, which is the heavy government spending. Now they're talking about delaying taxes, so they don't care about income. In the back of my head, I keep hearing Jay Powell say that they have lending powers, not spending powers. Everything that we continue to hear, especially from any government agency, is constant hype, how things are going to be okay. But when we watch their actions, especially if they extend this tax date, that's going to tell us things are really bad. We actually know that the economy has been destroyed. It's not coming back that fast, even though the metrics that they're putting out in the headlines are continuing to suggest that's what's happening. For instance, on the housing report today, we saw a 16% increase, but they revised downward substantially last month's report. Everything needs to continue to look good right now to keep market sentiment and the algorithms on the buy side of the market. We continue to see analyst after analyst come out talking about a tech bubble, but yet the NASDAQ just keeps going higher. That's likely to be the case as long as that's the rhetoric that's out in the markets. The Fed is going to continue to make every effort to keep their good face on and make sure all of us believe on what's going on and that the economy is screaming back like never before. On Thursday, when we get the GDP report, this is going to be the tipping point for the week, and I expect that that's going to be sugar-coated as well. There's no way they can let anything come out that's going to be negative at this time. Even if the market does decline, we know that the Fed's going to step in and support the markets. The interesting thing is our database and what we're seeing in rotation, everything I'm seeing from the technicals suggests that is the case. So it's built into the markets from a technical viewpoint as well as the underlying fundamentals. Even though most of the fundamentals we're seeing are the books are being cooked to a certain degree. It didn't matter what's going on in the background in this country. Nobody was willing to rock the cart. This entire week is going to be based upon Thursday's GDP report, and folks will be looking at the jobless claims. Those seem to be the most significant of the numbers that come out every week. Let's go ahead and take a look at the charts and see what they're telling us. Going to begin with the S&P cash tonight, looking at just the pattern that's unfolding, because this is important to understand. Just to review the entire pattern, we've had this three-wave pattern down here. Now we've got this upward pattern that is unfolding in a five-wave pattern to the upside. This current level right here is the top of a wave 3, and I discussed that we might have a top of a C wave, but the action that we saw 2 Mondays ago actually reversed and negated that scenario for the moment. Now there's a couple things that still exist on this chart. We have a gap here that still has not been filled, which the bottom end of that gap is 31.83, and we've seen a struggle across these tops here for several sessions. So it's going to be incredibly important for the market to get above that level. I don't believe this pattern that's setting up is about filling the gap. There's something much bigger going on. And let me break that down. We'll bring up the PPMs and talk about the momentum and other elements that are going to drive this market higher. So just looking at this most recent pattern, we have this move down. We went right to the 40-period moving average. We rallied up, and then we get this little minor correction. And this is significant because what's happening here is that it appears that we're going to go into a breakout move, and this will only be confirmed by a close above that 3183 level. Yesterday's action was able to punch out a new high, but it couldn't hold above that 3150 level. We finished at 3131. We're still going to need a minimum close above that 3154. Then 3183 is going to be the breakout number, which will suggest we'll go back and test that 3200 level that we made 3 weeks ago. Let's bring up the PPMs and look a little closer in this pattern. On the cash market, the momentum continues to be sideways, and I've been talking about the last several days that momentum precedes the price movement. So we saw a big move up in all three of the PPMs, 1, 2, and 3. Now they're in the sideways mode. They're maintaining a minimum trend mode at this time. Yesterday's action was able to close over the 10-period moving average, which is encouraging. And based on what's going on in the futures overnight, we're seeing some slight positives. So this pattern is continuing to emerge. Last night's report, I'm talking about the move in the NASDAQ that continues to lead the way. There are 3 objectives at the moment. And the first one is for a move to 10,324. And the higher objectives are 10,700 to 10,928. This is basically the target that I discussed at 11,000. I discussed this several weeks ago that the NASDAQ pattern seems to be ahead of the market. Therefore, we know that this is the leader and it's pulling the rest of the markets with it. It's already broken out of the pattern that I described in the S&P just a minute ago, and it's starting to move toward these upward objectives. Just a brief review of what I discussed last night. All of the PPMs are flatlined. Everything is at trend mode. PPM 1 is at 0.18, PPM 2, 0.40, PPM 3, 0.37. This is the daily chart. When we look at the weekly chart, you'll see even a larger pattern that is unfolding. There are 3 levels that were projected back shortly after the low was rendered on the big reversal week. They seem somewhat far-fetched. I remember looking at these numbers thinking there's no way we're going to get there. Well, we've actually exceeded all 3 levels of projections from a Fibonacci level. The top 2 are 1.382 times the length of the first wave and 1.618 times the length of that wave. And that seemed just about impossible looking back on March when markets were destroyed, the economy was shut down, and there seemed to be no prospects of any turnaround until, of course, that famous Sunday when the Fed came in and announced their support and all the facilities they were going to offer to the markets. Looking at the PPMs on the weekly, we're still at a 1.61 on the PPM 1. PPM 2 is at a plus 0.53, PPM 3, 0.57. And you also see that PPM 2 and 3 are accelerating. Now, PPM 1 is decelerating, but it is likely to remain above this first derivative that is coming into play right here. So this is going to continue to be a very robust trend. The worst thing that can happen in this market right now is a high-level consolidation. There doesn't appear to be any declines possible under the 93.60 level. I know that's a long ways below where we are right now. That number's going to be jumping at 1.5% per week. So it's going to be chasing the markets and come up underneath here. And as long as the PPM 1 remains above 0.5 in this type of pattern, it's going to support at those levels. The upper levels just for the market grid on the weekly NASDAQ suggest we're going to 10,380, possibility going to 10,515. I don't know if we're going to get to those levels, but those are certainly possible within the volatility range that we've seen in the NASDAQ. The final market for tonight will be gold. and this has continued to move higher. I discussed a couple of nights ago that looking at around 1820 to 1837 upside target right now. We're seeing the PPMs on 1, 2, and 3 starting to accelerate. PPM 1 is in trend mode, but PPM 2 and 3 are still in the process of moving higher. Now we're seeing some overnight strength again, up about 0.25%. We're at 1801.90, and it's going to be important to keep this momentum going to remain above this 1797 level on a closing basis today. As we look at the weekly graph, we see this is a very explosive pattern. I've talked about this a number of times over the past couple months. This consolidation range was very powerful, and we managed to stay above the 21-week moving average during this whole pattern. And one decline we had down back to 1700 was the final decline, and now we've rallied back above here, and it looks like we're going to see some substantial moves higher. And there's no Fibonacci projections at the moment, but I'll be covering that over the next several days, and most likely on Sunday night if this market continues to remain in this type of pattern. This will complete market commentary for tonight. Remember, we have the live cast at 1:30 p.m. tomorrow Eastern Time. Look forward to seeing you all there. Thanks again. We'll talk to you at the live cast and tomorrow night.